Hey everyone, in this video I'm going to update my recommendation of Ford stock. Coming into the quarter, I had Ford stock rated as a hold on the borderline of almost being a buy. Now, as I do with all of the companies that I follow, I update the recommendation every quarter when the earnings announcement come out and I'm able to analyze the quarterly earnings. So that's what I'll do in this video here. So you're going to want to tune in to see if I'm changing my recommendation of Ford stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Let's jump right in looking at Ford's third quarter results. And Ford operates in four segments: Ford Blue, Ford Model E Pro, and Credit. Ford Blue is the legacy business. That's the most profitable part of Ford's business, and that generated revenue of 25.6 billion. That was up 7%. Now, what's been happening in the car industry is it's still recovering from supply chain shortages that hampered supply during the earlier stages of the pandemic, and automakers have been slow to ramp up production of legacy vehicles. Instead, many of the investments have been going to ramp up electric vehicle production, and that's Ford's other segment called Model E, where revenue increased by 26% to $1.8 billion. Importantly, Ford is still losing billions of dollars every year in this segment. Ford Pro is another profitable segment for Ford where it sells its vehicles for professional use, and that generated $13.8 billion in revenue in the quarter. That was up 16%. And finally, Ford Credit, where the company makes money from financing the vehicles, revenue increased by 20% to 2.6 billion. Overall, the automaker is experiencing continued good conditions in the auto industry, the legacy auto industry, where they're still manufacturing the most profitable vehicles and selling them at higher prices with fewer discounts and incentives. The trouble lies in the electric vehicle industry, where competition is heating up, starting with the price cuts started by Tesla, and the increasing supply from nearly every automaker is raising the cost of goods sold because of competition for materials, and at the same time it's decreasing the average selling price because of price cuts to remain competitive. That part of the business is likely to continue to struggle because there is still supply coming online. Most automakers have plans to increase electric vehicle supply. At the same time, when demand for electric vehicles is not growing organically as quickly as many thought it would. Remember, the electric vehicle industry is supported by trillions of dollars of government stimulus to try and increase sales of electric vehicles. Yes, they're growing year over year by about 40%, 30% so far in 2023. But when you consider that's supported by trillions of dollars of government stimulus, that growth doesn't look as impressive. What would that growth be if there wasn't those trillions of dollars of government stimulus behind it? Organically, consumer demand for electric vehicles is tepid to say the least. Now, moving on, total revenue for Ford increased by 11.2% to $43.8 billion for the quarter. Double-digit growth is not something that you can regularly expect from Ford Motor Company, given the size and scale of the business it's already in. But given the recovery from the pandemic shortages, you may see Ford grow revenue double digits for several quarters more. The good news is this increase in revenue led to a jump in operating income of 124% up to $1.1 billion. While revenue increased by 11.2%, total costs and expenses only increased by 9.7%. That's solid considering Ford is spending billions of dollars to ramp up electric vehicles, right? It's investing in the manufacturing capacity and everything that goes along with increasing supply of electric vehicles. And so it's spending more than usual right now. and that's impressive to be able to increase your revenue more than your cost and expenses, given that you're transitioning into a new technology. Now, one of the things that's concerning for Ford Motor Company is its interest expense, which came in at 324 million in the most recent quarter. 324 million of interest expenses compared to 1.1 billion dollars in operating income. So interest expenses taking up roughly 30% of the company's operating income. Ford Motor Company, as I will show you a little bit later, has total debt of over $140 billion. That's a concern. Now, while I've mentioned a few other companies like Verizon and AT&T, which also have overall total debt of over $140 billion, it's more alarming for a company like Ford, because the big difference between Ford and Verizon and AT&T is that Ford is in a cyclical business. Car sales are cyclical. When the economy does well, you have better car sales. When the economy does poorly, you have fewer car sales. That's not the case with AT&T and Verizon. Whether the economy does well or poorly, 99% of consumers make their payments on their wireless phone plans, because that's the last thing, one of the last things consumers will pull back spending on. But car purchases is one of the first things consumers will delay purchasing, right? If you lose your job, you're not going to go out and purchase a car. You're going to delay that purchase. And that's concerning if you have $140 billion of debt, and all of a sudden you enter a phase of the business cycle where sales are slowing down while you still have to make these $300 million of quarterly interest expense payments. So this is something to keep an eye out for with Ford Motor Company. So after the quarterly results came out, Ford's stock price dipped. You can see it was trading at about $11.40 before earnings came out, and now Ford Motor Company stock is trading at $9.82. Most of this downside came from the decreased expectations from the electric vehicle sales, the electric vehicle segment of the business, and also the price that Ford had to pay to negotiate with the union and the raises it had to give its employees in order to settle the strikes that were happening at Ford Motor Company. I mentioned earlier Ford's heavy debt balance, and you can see here $142.66 billion in long-term debt. The good news is that it's down from over $170 billion in long-term debt. So Ford has been working to reduce this long-term debt balance. I would like to see the company to continue opportunistically paying down some of this long-term debt to lower that balance so that it can lower the interest expense and decrease the riskiness of the financial side of the business. Finally, Ford Motor Company is trading at a forward price to earnings ratio of 5.561. The stock is relatively cheap compared with the average stock in the S&P 500, but there's a reason for that. There's a reason why the stock is cheap, and one of those reasons we saw with the negotiations with the labor union, right? Ford doesn't have that much negotiating power with its employees. Every few years, the union comes in and demands a raise, and Ford has little negotiating power and usually has to give in to the union's demands, which increases its costs for operating the business and continues to increase pay for its workers. The second reason is the cyclical side of the business. It's up and down with the economy. Investors don't like or prefer not to invest in cyclical businesses. If they have a choice, they'd prefer a non-cyclical business that doesn't have the risks of the business cycle up and down. And then finally, competition in the electric vehicle industry is heating up, and that's where governments are forcing car companies to go towards is electric vehicles, and that's the side of Ford's business that's not profitable yet, and it's taking away from investments in the legacy business that is very profitable for Ford right now. So for those forces are keeping down Ford stock valuation. And for that reason, I'm keeping Ford stock rated as a hold. I don't like those forces. I'm not a fan of any car company overall, the car industry, because of all those reasons I mentioned. It's not one of the segments I like to invest in. But Ford, the stock is relatively cheap at 5.561. So if you're attracted to the dividend yield and you think that the Ford Motor Company can do well transitioning to the electric vehicle industry, I can understand investing in Ford Motor Company stock. But before I let you go, if you've gained any value from this video, please subscribe to the channel. It'll really help me make more videos just like this one. Thank you so much for watching.